Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Chinyi. Good evening. Today is Friday, October 3rd. I'm analyst Jiang Jida. Please remember to like, subscribe, and share to support us. If you have any investment questions, feel free to leave a comment. If we don't have time to answer your question today, we'll respond to everyone next Wednesday at the Yonghe branch office. All set and ready, we're about to head into the 3-day Mid-Autumn Festival holiday. So first, I want to wish everyone a happy Mid-Autumn Festival and a wonderful holiday. Although the Taiwan stock market will be closed next Monday, I want to remind everyone that the US stock market will still be open for trading. Therefore, on Monday, October 6th, our Chinyi Good Evening program will be broadcast live online as usual. So, the Good Evening show on October 6th will continue to be live, and we'll have another host. I believe it's Peng Rui joining us. Huang Pingrui, Teacher Huang, will be there to analyze the market for everyone, so just a quick reminder about that. Also, as I mentioned earlier, next Wednesday, October 8th in the afternoon, I'll be holding a small investment seminar at the Yonghe branch office. At the seminar, I'll be talking about topics like the Taiwan stock market, the overall economy, and international highlights. If you're interested in things like the Taiwan stock market or international news, you can also reach out to our Yonghe branch for more information. Alright, let's get back to it. Good evening, everyone. Hello, it's SHIH10 tonight. What's this section called? Frankfurt, right? Hi, Frank. Frank said that before, he could only listen to the class in the car. But today he finally made it home, so welcome to the class. And good evening to Hujuanjuan as well. And who is this? Hello, Fei to you, and also Ining Mei Dai Zi, and this one is called Mary Hua Mary Hua. Are you a new student? Alright, Mary Hua, good evening. And also am mingling, good evening, Fei to you. Okay, so let's get started with today's investment highlights. First, the non-farm payrolls, there's still a chance they might be announced tonight. Also, the selection for the new Federal Reserve Chair is about to be revealed. So, the non-farm payroll numbers, of course, they're very important. Globally, when observing economic data indicators, especially for the Federal Reserve when adjusting monetary policy, this is the most crucial market-watching indicator and tool. Now, in terms of economic data, when the Fed is adjusting monetary policy, besides looking at employment data like non-farm payrolls and the unemployment rate, they also pay close attention to inflation data such as CPI, PPI, or PCE. These two major indicators are key tools that determine the Fed's direction in either loosening or tightening monetary policy. So what about tonight? Will the data actually be released at 8:30? If it is released, we'll track it together with everyone. Now, because the US government is currently facing a shutdown, yes, the government shutdown, many departments are closed, so they can't release data or collect information. However, there's still a chance that the non-farm payroll data might be released today, and I'll explain why in a bit. Also, regarding the selection of the new Fed chair, Treasury Secretary Mnuchin mentioned today that next week, he will finalize the candidates for the Fed chair. The candidates have already gone through the first round of interviews, so they will narrow it down to 3 to 5 people, and then present them to President Trump for the final decision. The earliest this decision could be made is by the end of this year. Alright, so the decision will be announced by the end of this year. Now, which candidates actually have a shot, and what kind of impact will this have on the Fed's monetary policy? That's something we need to pay extra close attention to. In addition, let's look at the industry side of things. The whole market is focused on this, and a lot of people, even many of you, have been asking, in the end, is there unease in Taiwan or in the US because it's the US about whether the AI industry is in a bubble? This is a concern for everyone. Back in the year 2000, we saw the so-called dot-com bubble, where a lot of stocks just skyrocketed. Anything even remotely related to the internet or technology would surge, but once that bubble burst, the stock market experienced a massive crash. So, when it comes to this current AI boom, with so many companies constantly increasing their capital expenditures and making investments, will the AI industry end up like the dot-com bubble last time? Today, we'll also talk about related topics. Besides that, there's the original sin after the fireworks. What does that mean? It's about Tesla. Last night, Tesla announced its latest third-quarter delivery numbers, and they were pretty good. The total number of cars delivered in the third quarter was higher than the market expected. And not only did it hit a new high, but despite this positive surprise of exceeding expectations, yesterday the stock opened high and surged to 470, only to immediately drop, experiencing a significant pullback. The price fluctuated by more than 7% throughout the day. So how should we look at Tesla going forward? And is the so-called original sin after the fireworks really a sin? Is it actually good news or bad news? What approach and direction should we use to make our judgment? Tonight on Goodnight City, I'll go through and comment on all of this for everyone. Alright, good evening, or should I say good night. First, Let's start with the economic data. Let me give everyone a quick preview. Regardless of whether the non-farm payroll or unemployment rate data will be released at 8:30 tonight, let's do a simple review together first. First of all, this week, due to the Department of Labor being on holiday, both the initial and continuing jobless claims were not released yesterday, Thursday. However, the ADP private sector employment data, which is like a mini non-farm payroll, was released on Wednesday. Not sure what the ADP mini is? Let me give everyone a quick recap. The ADP report actually showed a significant drop in employment numbers. Instead of an increase, there was a decrease. Employment fell by 32,000 people. Plus, the previous month's data was revised down to a negative value. So, this situation obviously also reflects that the overall job market is rather lukewarm, tending toward a cooling trend, and this current state hasn't changed. However, when it comes to other economic data like the PMI, the Purchasing Managers Index, whether it's in manufacturing or in the service sector, it's still within a controllable range, and even the PMI data for the service sector remains above 50, which is the threshold for expansion. So, this means that, at most, the US economy is only showing signs of cooling in the job market. But if you ask whether the economic data shows a significant recession to the point where GDP would turn negative, that's not the case at present. So, there's no concern about a recession, nor is there any sign pointing toward one. What we do see is progress, and the only certainty is that things are just cooling down a bit. Now, the cooling in economic data or the job market is still within a controllable range, but the direction is clear. This also means that the Federal Reserve, in terms of monetary policy adjustments, will respond to this economic and job market cooling by moving toward rate cuts. Okay, so the current trend is correct. The only question is to what extent the cooling data will go. As we mentioned before, some of the economic data can come in lower. It can be slightly below market expectations or just a bit lower than the previous value. For example, let me give you an example. Let's say we're talking about the PMI data, Purchasing Managers Index, whether it's for manufacturing or services. Suppose the expected value is 50, and the previous value was 51. Let's say that's the case. Then, when the actual number is released, it might come in at 52. So what does that mean? It means the result is better than market expectations and better than the previous value, so the market will generally view it positively. But let's say the previous and expected values are both around 50 or 51. But this time, the actual number comes out and drops sharply to 46. In this case, the market will see it as a significant miss compared to expectations. Even though this might lead to a rate cut because it's below expectations, which means the economy is cooling down, the Federal Reserve would need to take some stimulus measures, so they would have to cut rates to save the economy and the stock market. But when the drop is much greater than what the market expected, even though there will be a rate cut, another concern arises in the market. People start to worry that the economy might be heading toward a recession. So now, when looking at a lot of economic data, everyone needs to keep something in mind. It's okay if the numbers are just slightly lower than the previous value or the expected value. That's not a big deal. It's also fine if the numbers are a bit higher, but just don't let that gap, the difference, get too big. If the difference becomes too large, then everyone will start moving toward the idea of a recession. And if that happens, it's actually not good for the stock market or the economy. Okay, the same goes for the non-farm payroll numbers. As for the non-farm payroll numbers, last month's figure was 22,000, a significant drop to below 22,000. This time, the expected value is just around 50,000, which is almost double. But whether the data will actually be that good, we don't know yet. We'll take a look together at 8:30. As for the unemployment rate, there's no need to worry too much. Both the forecast and the previous figure are at 4.3%. So if the numbers are released tonight, the unemployment rate should also stay within the 4.2% to 4.4% range. As for the actual non-farm payroll number, the expectation is still better than the previous figure. I'll walk everyone through it at 8:30. We also need to pay attention to the average hourly earnings, both the monthly and yearly rates. These will be announced at 8:30 as well. For the monthly rate, both the previous value and the expected value are at 0.3%. For the yearly rate, the previous value is 3.7%, and the expected value is also 3.7%. As long as the monthly or yearly growth rates for wages don't spike significantly. So as long as neither the monthly nor the yearly rates surge sharply, it means that overall inflation and wage levels are still within a controllable range. If, for example, the monthly or yearly wage growth rate suddenly spikes, say the monthly rate jumps to 0.6% or the yearly rate climbs above 4%, or even approaches 5%, then people will start to worry that rising wage costs will drive up business expenses. When business costs go up and wages rise, what happens? Companies will just pass those costs on by raising product prices. Once product prices go up, that means inflation will rise. So, when looking at these average hourly wage growth rates, whether monthly or yearly, it's really about wage costs and wage-driven inflation. You also need to keep an eye on these figures together. Besides the 8:30 data release, at 9:45 p.m., there will likely be another data release, the S&P Global Services PMI median for September in the US. Both the previous value and the forecast are 53.9, staying above 50. Generally, a reading above 50 indicates economic expansion, while below 50 suggests economic contraction. So what about current services data? In the US, this sector has consistently remained in expansion, so there's no need for concern. To 53.9, it's solid. Then, at 10 tonight, we'll look at ISM non-manufacturing PMI, previous 52, forecast slightly lower at 51.76. So, tonight, when our live stream ends, everyone might want to pay extra attention to the service sector PMI data coming out at 9:45 and 10 o'clock. These numbers are especially important and could have a significant impact on the market. Alright, now let's take a look at the officials' investment stances and related information. First of all, why did I say good evening and happy Mid-Autumn Festival? I wish everyone happiness. Great happiness is when the full moon brings families together. Actually, it's not just the full moon that brings people together. The weather these past few days has been pretty nice, so whether it's right before or after the Mid-Autumn Festival, if you just look up at the night sky, you should see a big, bright, round, and beautiful moon. So, for this year's Mid-Autumn Festival, the weather should be pretty good too. Everyone should take the opportunity to have a barbecue and spend time with family. Of course, I also hope that everyone's investment journey will be smooth and complete, whether you're investing in Taiwan stocks, US stocks, or any other investment products like futures or options. It's all the same. Every morning, you can watch the Signing Morning Show with our General Manager Fan, and at night, tune in to Signing Good Night for a forward-looking analysis on US stocks. So, on your investment journey, no matter what products you invest in, I wish everyone a smooth and successful experience. Alright, so tonight, let's talk about why the non-farm payroll numbers might still be released today. It's because of a Democratic senator named Warren. Alright, so Warren said this. Right now, the Bureau of Labor Statistics has actually already finished collecting and compiling all the data. In fact, everything is ready. Trump just needs to say, okay, release it. So they already have the non-farm payroll and unemployment rate numbers. They know everything. Why do I say this? I'll explain to everyone in a moment why I say they've already collected everything and are ready to release it. It's just a matter of whether they will or not and why that is. There's a keyword coming up, and once you see it, you'll pretty much know that everything is actually ready. He said that he urges the government to release the non-farm payroll data on schedule to avoid affecting the Fed's decision-making. He also mentioned that Trump still has the authority, even during a government shutdown, to require whichever department he wants to release the data. He has the right to release the data. In fact, I think the earlier this data is released, the less people will speculate. Anyway, if the market ends up being more recessionary or cooling down, that would actually help the Fed to be more proactive about cutting rates in October or even December. I think that's reasonable and it's actually pretty good. So, you should release it sooner and not drag it out unless there's something wrong with the data. If the data looks really bad, people might worry about a recession. I think unless the data is so bad that it's already been polished up, and even after that, it's still terrible when released, then people would worry about an economic downturn, especially in the labor market. Unless it turns out like that and people start looking at it from the opposite perspective, otherwise, logically, tonight Trump should still be able to release it. If you release it and give everyone a sense of what's going on, I don't think that's a bad thing. The Fed needs the right information for decisions, as Democrat Warren stated. All the data exists. It's just a matter of whether they release it. Why did I mention a very important keyword? It's because of Logan, a Federal Reserve member. Logan isn't a voting member this year, so he lacks voting rights. What did Logan say? He predicts unemployment might rise slightly, but won't go too high. We need caution cutting interest rates, otherwise we might do irreversible, something that can't be undone. Policies could shift from plan of rate cuts to stopping, or even raising rates. So he suggests that interest rate cuts shouldn't be too fast and should be approached with a bit more caution. For example, if you've already cut rates once on September 18th, whether to cut again in October or December should depend on the economic data. For instance, when the Statistics Bureau releases data like the CPI or non-farm payroll numbers and unemployment rates, we should base our next decisions on that data. He believes this would be a more cautious and reassuring approach. So why does he seem to already know what the data will show? Because he mentioned that the current estimated unemployment rate has risen slightly, but not by much. Why is it that every time, the Federal Reserve seems to have a viewpoint on this matter? That means, to some extent, he more or less already knows what tonight's unemployment rate might be. Okay, the forecast is just like we just told everyone, the expected value is 4.3. He said that the unemployment rate to be announced might rise slightly, but it won't be too high, so maybe tonight's number will be 4.4%. Maybe that's the case, or 4.5%. Anyway, it will increase, but not by much, and it might even end up being 4.3% when it's announced tonight, it's possible. So what he's saying is that the unemployment rate will rise slightly, but there's no need to get too nervous or worried about it. So I'm guessing he might have seen some data, or maybe they have some models that they use to calculate it themselves. Okay, by the way, if you misheard model as meat, and the adults are all hungry later after the kid finishes class in 45 minutes, don't just say you're hungry. I'm hungry too. Usually, every time I finish checking in after class, I go out to find something to eat, buy some late night snacks to take home. Sometimes it's not meat, sometimes it's a meat bun, or maybe some kind of northern style pancake, or I'll get some popcorn chicken or some braised snacks and pair it with iced coffee or iced soy milk. After gobbling all that down, it's weird. Every time after the late night show, a week later you'll notice your belly gets noticeably bigger. Everyone's stomach gets bigger, more belly fat, all from eating late night snacks. I did this for a week, and then when it switched from the late night show to the morning shift, I go to the branch office. When I go to the branch office, I have to give presentations and run around everywhere. Because I'm always on the move and the weather is hot, I end up sweating a lot, so I slim back down. So every time it's like the cycle: late night show, eat late night snacks, then early shift, go give talks, and then lose the weight again. It just keeps repeating. So it's not because of meat, Alright, another committee member, Goolsby, he's a voting member this year, he said the same thing. He said to avoid being too aggressive, avoid cutting rates too early. And if they don't get unemployment data, he thinks the Fed doesn't need to worry, because they can still make decisions based on other data they already have. What he means is, whether the government shuts down or stays open, they have their own ways to find relevant or similar economic data to support their decisions, to help them with the interest rate decision at the end of October or the one in mid-December. They can make decisions regardless. So it's not necessarily the case that tonight's non-farm payroll data has to be released for the Fed to take action. No, they actually have plenty of tools. To be honest, if the Fed didn't have other tools, other models, or other data frameworks to analyze whether to cut or raise rates, and had to rely solely on non-farm payrolls or the unemployment rate to make their next move, that wouldn't work. Wouldn't that be ridiculous? Such a huge institution having to rely solely on the Department of Labor or the Bureau of Statistics. That's just not possible. So you can imagine they definitely have some models, some research papers, and databases they can use for calculations or to run searches. So it's all good. So the point here is to let everyone know that whether it's Goolsby or others, they'll tell you that cutting interest rates right now is possible. He's not saying we shouldn't cut rates. Cutting rates now is fine, but it should be done cautiously. For example, maybe cut by a quarter point in October or December, just do it carefully. He thinks that's the safer approach at this stage. So a rate cut is certain, it will happen. It's just that it will likely take place in October. Or if it happens in December, since a rate cut will happen either way, that means the stock market in quarter for this year should still perform pretty well. After all, rate cuts are generally positive for the economy, for businesses, for the public, and for the stock market as a whole. So, following this logic, if the rate cut happens in October or December, the US stock market shouldn't perform too badly. Why? This is actually relatively positive news from abroad. This US stock market strategy comes from Tom Lee. Tom Lee often shares viewpoints, and sometimes he's pretty accurate. He recently said the current government shutdown won't disrupt the stock market's rally before year-end. He predicts the S&P 500 could reach 7,000 points by year-end. Right now, it's around 6,700 or 6,800, about 6,800. So aiming for 7,000 points means there's less than 200 points to go. He also said there's even more room for the market to go up. He explained that since 1950, so how long has it been since 1950? It's been about 75 years. Over the past 75 years, the average gain for the S&P in the fourth quarter has been 4.9% on average or by the median. Q4 tends to go up pretty easily. Actually, whether it's the US stock market, the Taiwan stock market, or any other market, it's the same. Basically, stock markets around the world generally have a higher chance of rising in the fourth quarter. The probability of rising in the fourth quarter is over 50% everywhere in the world. It's always like this. So will this year be the same? Maybe it will. What's special this year is that we originally expected August or September to see a drop because of the so-called September curse, but this year September didn't fall. It just held steady, which is pretty good. So, since the September curse didn't strike, will the strong fourth quarter trend turn out differently? We don't know yet, but for now, it looks like things are holding up. The fourth quarter market trend is still ongoing, and so far things are looking pretty positive. As long as there aren't any unexpected black swan events, everything should stay on track. Otherwise, looking back since 1950, the probability of the S&P 500 rising in the fourth quarter is as high as 81%, which is extremely high. So this rally is still ongoing for now, and will continue until a black swan event appears. Of course, neither you nor I can answer exactly when or what kind of black swan might show up. Nobody knows, right? For now, the market just keeps going up and up every day, seemingly without stopping. It's like a mindless rally that just won't quit, and you might even start to feel like you have no idea what's going on in life. But the direction is clear. US stocks keep rising, hitting new highs every day, and the Taiwan stock market is doing the same. But some of these stocks don't have strong fundamentals or stories. Some are just driven by the AI narrative and the growth environment. But is it so good it justifies going up every single day, non-stop, to the point where you question your life? The market just keeps pushing forward. The market just keeps pushing, and people are always looking for new stories, always searching for new themes. The most important thing is that at the end of this year, in quarter 4, there's talk of rate cuts again. And then, next year, rate cuts might continue. Plus, the Fed chair is going to be replaced next year, and it'll be someone Trump likes. And then, most importantly, at the end of next year on November 3rd, there will be elections for the US House and Senate. So, with rate cuts and elections coming up, plus the AI-related themes adding fuel to the fire, this market just doesn't seem to want to come down, even if you wanted to. Honestly, unless a real black swan event happens, I can't see any other reason for it to drop. What could really cause it to suddenly crash? Right now, I just don't see any black swans. There's no sign of that swan, just not seeing it at all. There's a theory called the black swan and another called the gray rhino. You all know these two are different, right? Gray swans and gray rhinos are not the same thing. There are a lot of differences, but both are kind of negative, you know? If there's time, I'll tell you the stories of the black swan and the gray rhino, because these two things are really different. But both of them have some negative impacts. Also, Treasury Secretary Bessent said that the candidates for the Federal Reserve Chair will be narrowed down to 3 to 5 people in the first round of interviews, and the final decision could be made as soon as the end of the year. He also mentioned the US-China trade war, saying that there might be a new round of negotiations with China on November 10th. He said there would be significant breakthroughs, but just how significant or what kind of breakthroughs, we don't really know. Anyway, whether it's Bessent or Trump, every time before or after negotiations, or even including Commerce Secretary Lutnick, their statements tend to be a bit exaggerated. Maybe it's for the sake of poll numbers or to give the American people confidence, to show that they're really doing something. So their remarks tend to be more positive, more upbeat. They like to sing their own praises, but as for how the actual negotiations with China are going, the real variables, maybe the things happening under the table, aren't being shared with everyone. So all they say is that the next round of talks will have a major breakthrough. But just how major and what kind of breakthrough, we'll have to wait until November 10th to follow up with everyone. But right now, it does seem like the trade negotiations between China and the US are indeed moving in a better direction. At least they're heading in a positive direction, and that's enough. As things move in a good direction, the mainland stock market and Hong Kong stocks shouldn't perform too badly, and the bullish trend can continue upward. As for the US stock market, basically, as long as there are ongoing talks and hope, the US market will keep pushing upward, especially with the rise of AI. As for who is more likely to be elected as the Federal Reserve Chair, well, it's just these 3 people. We've talked about these 3 in every speech or in past Goodnight shows. Good evening, Monica. Waller, Jefferson, and Goolsbee, these 3 have the best chance, and in fact, they're all relatively dovish. Who is Waller? He's a former member of the Federal Reserve Board named Waller. The current board member is named Waller, so there's one named Walsh and one named Waller. The other one is an economic advisor named Hassett. So Waller, Walsh, and Hassett, these 3 are said to have the highest chances at the moment, unless someone unexpected suddenly appears and shakes things up. Overall, I think both this year and even into next year, the trend is leaning toward rate cuts. So what do we see in the 10-year Treasury yield? Both the yield and the terminal rate are holding around 4.09%, with the terminal rate even dropping to 3.62%. The probability for the timing is almost moving toward 4%, so overall, the outlook is more dovish. Also, regarding the number of rate cuts, it's now at about 1.8 times. I'm not sure if that will stay the same, but it's roughly between 1.6 and 2 times being discussed. I think by October or December, the market volatility will be more noticeable. Alright, good evening, everyone. It's normal if there are no non-farm payroll data releases, then it's just business as usual. But tonight, I'm not sure if there will be any. Let's see. With Democratic Senator Warren calling out Trump, will they actually release the data? If it does get released, we'll follow up with everyone at 8:30. As for the US dollar index, it continues to be relatively volatile and weak, dropping by 0.08% today, still hovering around the 50-day moving average. As for geopolitical risks, let's just take a quick look at this EU news. Why the EU? Today, regarding the trade war, they said that they plan to reduce the annual import quota for steel. For example, let's say this year I plan to import 20,000 tons of steel in total. Now, what does it mean to reduce the import quota? It means that from 20,000 tons, they might cut it by 44%, so out of 20,000 tons, I would only import 10,000 tons. For the remaining 10,000 tons, if you want to bring them in, you'll have to pay tariffs. So, if you import 10,000 tons within the quota, that's fine, but for the other 10,000 tons, you'll be taxed. In the past, maybe they didn't adjust this, but this year, they're saying they plan to slash the annual steel import quota by nearly half. Also, they're proposing to raise the steel import tariff to 50%. It used to be 25%, now they want to increase it to 50%. After he said this, what happened next? The European Automobile Manufacturers Association immediately voiced their opposition. Why are they against it? Because the auto industry uses steel, aluminum, and a whole bunch of other raw materials. If you raise those tariffs to 50%, the cost of making a car, just the body alone, could go up by 20 to 30%, which is a huge increase. So, the European Automobile Manufacturers Association was the first to speak out and say, "We oppose this." They said this would raise prices and also worsen inflation. So I think honestly, the EU is just making a move for now. Let's just wait and see. Whether they'll actually go through with it in the end, the chances of real implementation aren't high. And here's why. First of all, the European auto industry, its association has already voiced opposition. European cars are really important, right? European car exports to all parts of the world are crucial. Think about Europe, Germany, for example. Mercedes-Benz, BMW, Ferrari, so many famous car brands, right? Volkswagen, Volvo, they're all European. The European auto industry is huge, so it accounts for a massive share of exports. So if costs go up, then the prices of these exports will have to go up too. They'll have to raise prices accordingly. But if prices go up, foreign companies or distributors might not be willing to pay for it, which means local European manufacturers would have to absorb the extra cost themselves, and that would be a real headache. Second, let's talk about the current inflation in the Eurozone, the CPI. After a lot of effort, the annual inflation rate has finally dropped to around 2% to 2.2%. The latest annual rate is in this range, 2%. That means they've already hit their yearly target. So if all of a sudden there's an import quota or a tariff hike, and inflation jumps from 2% just like that, if it jumps to 3%, then what? That would mean the European Central Bank wouldn't be able to cut interest rates. If they can't cut rates, which usually signals economic growth, the stock market won't be able to hold up. So they absolutely have to keep inflation at their annual target of 2%. Only then would they have the grounds and the conditions to cut interest rates. Okay, so when you hear the EU talking about raising tariffs on steel and related products, I don't think there's much chance of that happening either. Even if they want to negotiate, it'll take a long time, and the US might not even agree. Now, let's take a look at another issue. This one is about geopolitical risks related to Ukraine. This situation is also quite interesting. I also don't think the US will really get itself involved. The US said that it will provide intelligence to Ukraine. But what kind of intelligence? Basically, they're saying, if you have missiles and you want to attack someone, if you want to attack Russia, I can provide you with information on Russia's refineries, oil pipelines, and energy facilities. Alright, okay, so why does the US want to provide this kind of information? Because they say if Ukraine attacks Russia's refineries, oil pipelines, or energy facilities, after the attack, Russia won't be able to produce oil or natural gas. So, Russia won't have any money to make, and if Russia can't make money, then it won't have the funds to support its weapons, its national defense, or its frontline soldiers, generals, or supplies, right? But there's another side to this. It's a double-edged sword. If Ukraine really uses missiles to attack refineries, oil pipelines, or energy facilities, then let me ask you, won't crude oil prices shoot up to over $100? If oil pipelines and natural gas prices go up, then crude oil and natural gas prices will rise, and so will the cost of goods. Isn't that a contradiction? If prices go up, Trump definitely doesn't want that, because if the CPI and PPI surge, how could you possibly lower interest rates? So if you tell Ukraine to go attack Russia or whatever, and if they actually do it, when prices go up, the Federal Reserve won't cut interest rates. Isn't that completely at odds with what Trump wants, which is for the Fed to keep lowering rates, right? Now, let's move on to the second point. The US has said it's considering providing Tomahawk and Barracuda missiles, which have a very long range, about 2,400 kilometers. Previously, the weapons they provided had a range of about 200 kilometers. To give you an idea, 200 kilometers is like firing a missile from Taipei and it reaching Taichung. With that range, you could hit Taichung. If the president's office wanted to strike Taichung, that's a 200-kilometer range. But what does a range of 2,400 kilometers mean? You could launch a missile from the presidential office in Taiwan and hit Beijing. That's the reach we're talking about. Cross the median line and hit Beijing. 2,400 kilometers is more than enough for that. That's basically the idea. So why do they want to provide Ukraine with long-range missiles like the Tomahawk or the Scalp with such extended range? Because, as they say, it can serve as a deterrent to Moscow, Moscow being the capital of Russia. Why deter Moscow? Because if the range is long enough, they could launch from Kiev, Ukraine, and even fire a missile directly at Moscow, since it's so far away. That's the main point, but everyone needs to consider. I'm saying, take this as aware of, because it's not going to happen. And the reason is, basically, there are many reasons. First, as mentioned, if they attack refineries or oil pipelines, inflation will go up. International crude oil prices would suddenly spike, which would be a disaster. Trump doesn't want oil prices to surge. That's the first reason. The second reason, If he really gives those missiles to Ukraine, think about it. Would Ukraine really dare to use those Tomahawk missiles to strike Moscow? Even if you get this weapon, let's say you have it, would you really dare to launch it 2,400 kilometers to hit Moscow? Wouldn't that throw the whole world into chaos? If Moscow really gets hit, that would truly become a world war. That could actually turn into what people call a black swan event. It's better not to give them those weapons, but if you do and they cross that line, imagine one day you suddenly wake up, we're all asleep, maybe watching the US stock market in the middle of the night, and suddenly you see breaking news, wow, Ukraine has launched a missile and hit Moscow. That's it, it's over. That would really be the end, and I think that would mean world war. Because if Russia gets upset, then whoever provided weapons to Ukraine, maybe the US, the EU, NATO, these countries would all get involved in the fighting. That would throw everything into chaos, and the whole European continent could end up in trouble again. It would be a huge mess. So I think this time, the US providing intelligence to Ukraine is to some extent more about intimidation. Whether they'll actually go to war, the chances aren't great either. If you really start fighting, it'll just go on and on with no end. I believe they all understand the stakes here. So this 2,400 kilometers, just take a look and keep an eye on it. That's all. Of course, we also hope that this war doesn't keep escalating, because if it does, it's the people who suffer the most. Those in power, holding authority, sit comfortably in the White House or their cozy presidential palaces, right? What are they doing? Just pressing buttons, pushing missile launch buttons, giving orders. They're not picking up guns and going to the battlefield. Who actually goes to war? It's always the ordinary people, civilians, and sometimes military officers. That's just how it is, right? So war is war. There are no winners, that's all I can say. In war, there are no winners. Whether you're fighting or being attacked, nobody wins. The ones who lose most are ordinary people. That's just how it is, because you lose your home, your house is gone, and you've spent 20 or 30 years paying off your mortgage, right? You still have to pay your mortgage, but what if your house gets bombed? In the end, ordinary people suffer most. So crude oil prices? Honestly, this news, just look and move on. To be real, it doesn't help oil prices. So you might ask if they'll provide weapons, but honestly, they don't even dare to attack. So what about crude oil prices? Today, they edged up by 0.81%, but they're still relatively weak, staying around the 200-day moving average. Overall, the trend remains on the weaker side. As for economic data, we'll check around 8:30 to see if there are any updates on the unemployment rate or non-farm payroll numbers. If there are, we'll track those together. If not, then a bit later we'll talk about some industry-related news. Alright, let's take a look now. Was there any data released at 8:30 just now? Okay, so at 8:30 tonight, it looks like there still hasn't been any data released. Seems like nothing's out, since right now it's exactly 8:30, and there doesn't seem to be any data at all. So, this might be due to the US government shutdown situation. Tonight's non-farm payroll data hasn't come out, but that's alright. Even without the data, the stock market is still moving, and its direction hasn't changed for now, it keeps going the same way. Since that's the case, let's look at some industry-related stuff. And about those unique features. I always say that after the fireworks, there are always some original sins that follow. Of course, the fireworks themselves are brilliant. Just look at Tesla's stock price recently, it's been rising beautifully. It just keeps going up and up, from 330 all the way up to 470. Yeah, from 330 to 470, the surge, breaking through that downward pressure line, going from 330 to 470 is strong. That's a $140 increase. But yesterday, why did we see a big drop? It fell by 5.11%, a long black candlestick. Of course, this long black candlestick will definitely cause the short-term uptrend to take a bit of a breather. It makes the short-term rally pause because after all, when you have a big surge and good news comes out, a lot of people want to sell when the price spikes up. People start selling, prices drop like a long black candlestick. In the short term, we're likely to see a correction after a big rally. But does it mean a bear market? Not necessarily. No need to be worried, but a pullback after a big run-up is likely. There will be a correction, you can look for a new buying opportunity. So why did this sharp pullback happen, with such a long black candlestick? Here's how it goes. Yesterday, Tesla announced its third quarter results. Production for Q3 was 447,000 vehicles, an annual increase of nearly 5%. Deliveries reached 497,000 vehicles, almost 500,000, a year-over-year increase of 7.4%. This beat market expectations and set a new historical record. In China, September sales, whether looking at just September or the whole third quarter, continued to grow. And in terms of their energy storage products, the installed capacity also increased significantly, reaching as high as 12.5 gigawatts, which is extremely high. Last year, during the same period, it was only 6.9 gigawatts, so this year it actually doubled. Alright, as we've mentioned before. For Tesla, the energy storage equipment and product segment will be a very important economic driver for them in the future. Why? Because commercial energy storage, or even residential home energy storage, will become a very significant demand as electricity usage evolves going forward. AI needs a lot of electricity, right? AI, server factories, all of these require a lot of power. So, who can control electricity? Who can control the flow and usage of electricity? Who can actually own the amount of electricity used? Okay, in a way, it's like preparing for war. You need soldiers, but you also need supplies. You need money, you need food, and you need an army. What kind of army? For example, in the AI industry, if you want to compete, you have to buy NVIDIA's GPUs. It could be the H100 series, or the B series, or like the GB200, GB300 that I have now, or even AMD's MI300 series. All of these are options. If you want to go to war, you need an army, right? You need weapons, and in this case, your weapons are GPS, you buy GPS. After you've finished with NVIDIA or AMD, what do you need? Money, right? You need money, and to make money, you have to weigh your options. Many companies need capital expenditures, 30, 50, 60, 80, 90 billion, constantly increasing capital spending. And these amounts are in US dollars. Alright, so you have soldiers and you have money. What else do you need? You need food. And what is food in this context? How will you operate all this machinery and equipment? Don't you need to run them? Servers handle such high power with so many GPUs, tens of thousands installed, and electricity consumption is extremely high because you need to do computations. AI computations consume tremendous energy. Where does the energy come from? It could be nuclear power, maybe small nuclear power plants, or other things like that. It even includes energy storage devices like those from Tesla. In the future, some companies might really need these as well. So, energy storage and energy itself will be extremely important for the development of AI going forward. Let me say it again. 3 things. There are 3 things in the AI industry that are absolutely essential. First, you need an army. Your soldiers are the GPUs. How many GPUs do you have? How many GP300s do you have to be able to compete? Second, do you have enough money? Does your company have enough funds? Do you have 30 billion, 50 billion? If you don't, you can't win. You'll have to rely on renting instead. Next, do you have enough resources, specifically energy? Do you have enough electricity? Can your factory keep running? Can you provide enough computing power? So remember, soldiers, money, and resources. In the future, whichever company has all 3 of these will be the one that stands out on its own. Just remember, the company that dominates these will rule the AI market. Alright, moving on, besides Tesla's significant growth in energy storage, especially the 12.5 gigawatt hours, on October 23rd they'll release their financial report. October 23rd is coming up fast. And then there's the shareholder meeting on November 7th, just 2 weeks later. Of course, they'll be talking about things like AI, robotics, electric vehicles, energy systems, and a whole lot more. So, with all this good news, why is it that Q3 deliveries hit a record 500,000 units? Incredible. China is growing, and European market, France and Denmark mentioned yesterday, also seeing growth. Not easy, but by 2025, we're seeing positive growth, strong performance. So why, despite this, stock opens high then drops, with big long upper shadow? Reasons. First, good news priced in. Today, positive news digested. Second, why did the third quarter, the classic third quarter, suddenly surge? The delivery volume shot up to nearly 500,000 units, which is extremely high, a record high. 500,000 units. Why? A major reason is that in the US, the $7,500 tax credit subsidy for electric vehicles ended at the end of September this year. It was over, gone. So after the end of September, starting in October, that subsidy is no longer available. Oh, whether you're buying a used car or a new car, it's the same. Used cars used to get a couple $1,000s in subsidies, and new cars had a $7,500 subsidy. Starting October 1st, all of that was removed. Trump got rid of all these energy subsidies, electric vehicle subsidies, alternative energy subsidies, all of them gone. What does that mean? It means that a lot of people might not be able to buy electric vehicles anymore, since those tax credits help lower the cost of buying an EV. So, the demand or the delayed and diminishing benefits for electric vehicles will all be affected. That's why the third quarter's financial report numbers look so good, because a lot of consumers rushed to buy before the end of September, before the third quarter ended. They all hurried to make their purchases before the changes took effect. So what does that mean? It means the third quarter financial report will look great, and the delivery numbers for quarter 3 will be excellent, really high. The reason is that the tax credit ended at the end of September. In other words, it's 2 sides of the same coin. Since the tax benefit ended before the end of September, demand surged in quarter 3. But on the flip side, starting in October, the quarter 4 financial report will not look as good. So now everyone can see the stock price reflects this. It has already reacted in advance. The stock price went from $330 to $470, reflecting strong Q3 financial report performance and record high Q3 delivery numbers. Now that this is priced in, what's next? We're moving into Q4. What will happen to the stock price in Q4? In Q4, the stock price will react early. Anticipating Tesla's Q4 financial report might not be as good. It tends to be this kind of negative news, you get what I mean? That's the reality. It's not just economic data or delivery numbers showing this trend. Even Elon Musk himself has talked about it. Previously, Musk warned that with the disappearance of subsidies, the company will face tougher times in the coming quarters. So, it's the same situation facing more difficult times. Maybe the performance in the fourth quarter won't be that great. And what about October 23rd? Isn't there a third quarter earnings report? The third quarter's results should be pretty good. But for the fourth quarter, things might be a bit more conservative. So when the earnings are announced on October 23rd, there might still be a chance for another upward push. There's still a chance, because with such impressive delivery numbers in the earnings report, revenue might once again exceed expectations. So when you're making these trades, whether it's Tesla or any other company, always remember this. Right now, global stock markets keep hitting new highs, all at historic peaks. As I've said before, when we're at historic highs, it means we're constantly setting new records, which signals a bull market, so that's certain. Stocks or indices that keep hitting new highs confirm that the bull run is real. But whenever you encounter good news like this, just stick to this principle. If positive news pushes the price to a new high or a spike, sell once. Just go ahead and sell once. If you don't believe it and you don't sell, a lot of other people will. Right? Because after all, we're at historic highs now, not historic lows. At historic highs, even the slightest disturbance makes everyone not want to be the last one holding the bag. So people start trampling over each other, and that can get ugly. You never know when a black swan event might happen, or when a gray rhino might appear, nobody knows. So in this kind of situation, whenever there's positive news and the price surges, everyone rushes to cash out and secure their profits as quickly as possible. For these stocks, and many reporters too, as long as there's good news, as long as there's positive news, they're not afraid of bad news. When bad news comes, many actually want to buy. When bad news hits, some even see it as a buying opportunity. So when Q4 comes, if Tesla's earnings report disappoints, it might actually become another good selling point for Tesla. Bad news isn't something to fear. Right now, it's when good news comes out that you need to be careful. Be cautious with positive news. Everyone just says, wow, good news is great. But let me tell you, a lot of people take this opportunity to sell quickly. Some will quietly cash out first. So when you see good news, remember to sell some first. How should you sell? Sell in batches. You don't have to sell everything at once. Just sell a portion, sell in stages, and pocket some profits first. And then, if the price drops, if it falls down to the 10-day or 20-day moving average, why would you want to sell everything? Instead, slowly build your position again, gradually clear out and gradually build up, buying in batches. The lower it goes, the more you buy in small amounts, buying in stages, building your position bit by bit. The premise, though, is that the stock's trend must be upward and its fundamentals must be solid. As long as these conditions are maintained, you should have no major issues holding onto your profits through the fourth quarter market. Yeah, just like what Fan Hua said. It's at a historical high, so you could sell at any time and make a profit. That's why being at the highest point is very risky. So when you encounter good news, like I just mentioned, don't chase it. When there's positive news, sell first. If the price surges on good news, sell first. Okay, another thing regarding applied materials. Today, the US Department of Commerce might announce a new regulation on September 29th. With this new regulation, expand the export restriction list, further limiting applied materials. So what does restricting applied materials mean? It means that unless they obtain certain export licenses, they won't be able to export related products, semiconductor equipment, parts, or services to Chinese customers. And as for applied materials, they said that because of this issue, the company estimates that fourth quarter revenue might decrease by $110 million. Then by 2026, annual revenue could drop by as much as $600 million. So, is this bad news for applied materials? Of course it is. It's definitely negative news because revenue is going down. But there's no need to exaggerate the impact of this bad news. And here's what I want to explain to everyone. Whether it's the export controls on applied materials or the previous chip restrictions on Nvidia and AMD, all of these controls are part of the US-China trade war. These are, you could say, side moves or bargaining chips, basically tactics to push China to compromise. Only if you're willing to compromise and maybe exchange some benefits with me, will I be willing to export these chips to you. So you can imagine that companies like Applied Materials, Nvidia, AMD, Intel, and many others are all affected by this. All of these companies will face a lot of trade war restrictions in the future, but in the end, what usually happens is that these restrictions are gradually relaxed during US-China negotiations. So in the short term, you can see the news about Applied Materials as a negative factor. It definitely is in the short run. But in the long run, I think there are still a lot of uncertainties. Over a very long time frame, I don't think the restrictions will be so rigid that exports to China are completely cut off. I don't think that's going to happen. For example, people said ASML couldn't export, But look at ASML's stock price, it went up crazy. So anything is possible. If TSMC had semiconductor tariffs, they said there would be no tariffs at all. Now they're saying no semiconductor tariffs. Why? Because TSMC has already set up factories in the US. They spent $165 billion to build 6 factories, plus R&D centers and packaging plants. So they said, because you have factories in the US and invested so much, TSMC doesn't have to pay tariffs. The same goes for Apple. Apple has factories in the US and plans to invest $600 billion over the next 4 years. Constantly investing, so Apple is also exempt from tariffs. When Apple imports iPhones or components from China, India, wherever they're made, they can all come in without any tariffs. So at first, everyone said that everything would be taxed, but in the end, maybe because of pressure from corporations, pressure from prices, or pressure from negotiations, some companies end up not being taxed at all, just exemption after exemption after exemption. So in the end, what was the point of taxing those things in the first place? It's just a tactic, and this tactic applies to companies like Applied Materials as well. It's just that Applied Materials went up 2.7% yesterday, and before the market opened today, it basically dropped back down. But there's no need to worry about the drop. Just look at this neckline. This blue line here is the short-term neckline. If I take a look at the price, everyone will know about how much it is. As long as this neckline hasn't been broken, there's really no need to worry. Really, no need to worry. Even though there have been some regulatory issues. So I'm providing you all with this information about Applied Materials. Lastly, let me mention something. Many people are concerned about whether AI is going to turn into a bubble. Let me give you my conclusion. I believe that AI will eventually become a bubble in the future. There will definitely be a bubble, and it will be a big one. But it's not happening now. It's not happening now, and in the short term, we won't see a bubble either. It won't happen in the short term. As for exactly how long it will take before a bubble appears, in my opinion, at least for the next year or two, as long as the demand remains strong and everyone in the market is still talking about AI, talking about it, and everyone is still investing, still putting money in, within these 1 or 2 years, it probably won't burst yet. As for when it might actually burst, I'll tell everyone about that in a bit. Now, the reason why I say that as long as this wave of AI investment hasn't ended, it won't burst so quickly is, first of all, OpenAI, everyone knows about OpenAI, right? It's a company that Microsoft has invested in. OpenAI is really impressive. Its ChatGPT, which we use a lot now, like GPT-4, 4.5, GPT-5, and so on, is very useful for building models and Q&A. GPT is honestly really handy. We often ask GPT questions ourselves. Recently, OpenAI just completed a $6.6 billion employee stock transfer. So, for the employee stock transfer, you need to set a price, right? How is this price determined? It's based on the company's current valuation, which is now at $500 billion US. So, $500 billion is extremely high, $500 billion US, not new Taiwan dollars. You could almost say it's on par with SpaceX, the one owned by Elon Musk from Tesla, so it's incredibly impressive. And with numbers like these, it means that OpenAI stock is valued at this price. It's a very, very high valuation. $500 billion US is an extremely high valuation. Let's use an example. Tesla's current market value is about $1.5 trillion US, 1.5 trillion. Then companies like Apple and Microsoft are probably around $3 trillion. Nvidia is about $4.5 trillion. So if you think about it this way, you'll realize that a company that hasn't even gone public yet, a company that hasn't made a profit, a company that doesn't have a stable cash flow, its valuation is actually, it hasn't even IPO'd yet, and its valuation can actually reach as high as $500 billion US. So this shows that the market's enthusiasm and recognition for AI is still at a crazy stage right now. There's still more demand than supply. Okay, so $500 billion is extremely high. In addition, Citibank said that it has raised its forecast for the AI infrastructure of tech giants in 2029. Their forecast has been raised from $2.3 trillion, and by 2029 it could surge to $2.8 trillion. That's an increase of nearly $500 billion, almost 0.5 trillion more. And they also mentioned that as early as the end of 2026, major CSP operators, like those in cloud infrastructure such as Microsoft, Meta, Google, Amazon, these big CSP players, he said that by the end of 2026, capital expenditures will reach as high as $490 billion next year, which is extremely high. The original estimate was $420 billion. For example, this year, if you look at Meta, Microsoft, Amazon, and Google, their combined average capital expenditure for this year. Each of these companies spends about $70 billion on average. Of course, some are higher and some are lower. Some might be 80 billion, some might be 60 billion, I'm not sure. But if we just take the average as 70 billion and multiply that by 4 for these 4 companies, that's already about $300 billion in capital expenditure this year alone. This year alone, it's already over $300 billion. Definitely more than that, it's already surpassed that this year. And he said that next year, it will reach $490 billion. So let's just round it up to 500 billion. So how much growth is that? From 300 billion to at least 500 billion. You can imagine how huge that growth is. 6%, 70, okay. Then he said that in the latest Q3 financial reports, these companies might announce how much capital they've received, how much they'll need to pay next year, how much they'll need to invest, how much output they'll have, and how much expenditure is required to meet the demand. These are extremely, extremely large numbers, truly massive figures. So, you might ask, is this thing going to turn into a bubble? Yes, it will. Sooner or later, there will be a bubble. But because you have to remember the current demand is very high. What does it mean for demand to be very high? For example, OpenAI's stock price market value is now estimated at $500 billion. That's such a high valuation. Citibank says that whether it's tech giants or CSCBA, their capital keeps increasing. Why does it keep going up? Of course, the biggest beneficiaries are NVIDIA and AMD, because they specialize in selling chips. They specialize in selling chips, selling these general-purpose ones. General-purpose chips and the concept of electric drills are selling at such high prices. Why is everyone scrambling to get them? Why? It's just like the current stock market. The stock market right now is all about FOMO. What is FOMO? It's the fear of missing out. People are worried they'll miss out, worried that if they don't get in now, they'll miss the opportunity and won't be able to get on board in time. So yeah, everyone wants to jump in and get on board. Alright, that's what getting on board means. FOMO is just the fear of not getting on board. So now, whenever the market dips even a little, everyone rushes in to buy, trying to secure their position as quickly as possible. They're worried about missing out on this big wave, the AI boom that's constantly hitting new highs. If they can't keep up, they won't profit from this trend. That's why everyone's afraid of missing out. It's called FOMO. It's the same in the AI industry. Right now, the demand for AI is still very high. Everything in the computer AI field, AI robots, all things related to AI, has already started to surge and permeate our daily lives. So, if you don't use AI, you start to worry that you'll be replaced. Whether you're an individual worker or a company, there's this fear that if you don't use AI, one day you'll be replaced and eliminated from society, eliminated from the industry. That's why everyone is so-called. All these companies are formal, and everyone is worried that if they can't buy NVIDIA chips, they won't be able to develop AI. If they can't buy AMD chips, they won't be able to develop AI. If they can't do it themselves, they have no choice but to rely on Microsoft, Meta, Google, or Amazon. If they don't rent resources from them, they can only rent computing power from these companies to run their own business operations. Okay, so that's why everyone is worried. So what kind of situation will happen under these circumstances? It's like you can imagine an auction house. An auction house. NVIDIA is like the auctioneer. NVIDIA says, all right, next I'm going to launch the GB300 series. Or like in 2026, they're going to launch the Rubin series, which starts with an R. Rubin, if I remember correctly, is a physicist, right? A very famous scientist. So let's say I'm NVIDIA, I'm the auctioneer, and in 2026, I'm going to launch the Rubin series chip. Right now, each chip is worth 5 million NT dollars, 5 million NT dollars, 5 million NT dollars. So every time I want to buy, I have to supply at least $1 billion worth at a time. Who wants to buy? Microsoft, do you want to buy? Raise your hand if you want to buy. Microsoft says, 1 billion once. Google, do you want it? Google wants it. Amazon, do you want it? Amazon says, 2 billion once. 2 billion. Then 2 billion. And then finally, Meta says, Meta, how much do you want to grab? Meta grabs 5 billion. 5 billion once. 5 billion twice. That's the order. This time, the latest, the newest Rubin series chip all at once. Who gets the first batch of 50 billion? The latest batch is out. Who gets it? Give it to Meta to develop AI. So Meta gets it. Meta gets the newest and most advanced AI. What will Meta do with it? They're not going to just turn around and sell it. No, they won't make that much money from it. So what will they do with it? They'll use it to rapidly develop their AI. Because these latest chips have the best features, the best performance, the highest efficiency, and the most powerful computing capabilities. It's incredible. With these, their AI can jump straight from, say, version 2.0 to 3.0 or even 4.0. The 100 series versions are extremely powerful. They can totally surpass OpenAI and even Anthropic, which is under Amazon. Their chip computing power is just way too strong. So at this point, Microsoft got nervous, Amazon got nervous, and even Google got nervous. So everyone started scrambling, trying to get ahead. They started telling NVIDIA, for your next generation of chips, Rubin first generation, and then the double R100, R200, R300, we want to secure them first. So then NVIDIA asked, how much are you willing to pay? Because by then, the units were already being snapped up. So at this point, Microsoft and Amazon said, we're willing to spend 60 billion to secure them. So what about this 60 billion? The answer is, when the product comes out, who do you sell to first? You sell to whoever grabbed it, you sell to Amazon, they secured the order. So it turns into a situation where big companies, major players, everyone is worried about missing out, so the more they scramble, the higher the price goes, the more they buy, and the more they buy. And then after that, it's just counting the money. The one counting the money is Jensen Huang, just counting cash day after day. Every night he goes to sleep, that's another $20 billion coming in, right? Pretty happy. Huh? So Nvidia is the biggest winner. When will it crash? When will it crash? Because right now, demand is huge, right? Demand is huge now for AI robots, and AI-driven FSD. The demand is enormous. So when will it crash? It'll be when these companies, Amazon, Meta, Google, throw in 80 billion, 90 billion, 100 billion. They keep buying more and more. From the B series, G series, or series, and by 2027, maybe the HX series, who knows which series, they buy up everything. But then, one day, they suddenly realize that the market demand isn't as big as they imagine. I've made so many AI robots, so many different kinds of AI, like ChatGPT 2.0, 3.0, 4.5, all the way up to 10.0. Anthropic, Claude is now at version 4.5. It's already reached version 45, which is incredibly high. And then I realized, sigh, it's strange. These consumers, the general public, are always just asking, what exactly can GPT buy online? How do I make 3D figurines? I want to make 3D figurines. So why do I need to buy the Ruby series? There's no need. I can just use the H100 chip to make 3D figurines, right? I don't need to make it so complicated. When the day comes that this happens, when every Tom, Dick, and Harry wants to do it, wants to get into AI, all the big tech companies are investing so much in AI, but in the end, the cash flow just doesn't come back. And when does the bubble burst? It's exactly when you can imagine it happening. When every industry around you is saying, I have AI, I have AI, I have AI, that's when things might just go completely crazy. What does it mean when everyone says, I have AI? It means even the vendors at the market selling vegetables and fruit will tell you, now I have AI, AI apples, AI vegetables, AI calculations. You go to buy meat and it's AI pork, this AI helps you pick pork, AI helps you pick peanuts, AI-powered robots, electric vehicles. Basically, when everything has AI, that's when you need to be careful because it means AI has become extremely widespread. Domestic machines are great. The widespread adoption of AI is a good thing. But when every random company and every random product, no matter how insignificant, starts getting tied to AI, what does that mean? It means it's just a dream, something overhyped. Think about it. Do you really need AI to buy a piece of pork belly? Of course not. When you buy an apple, a Fuji apple, do you care whether it has AI or not? You don't need it. So think about it. When everything suddenly has AI, that means it's an AI bubble. Everyone wants to get a piece of it. Everyone thinks that just slapping the word AI on something will make money. That's when things go south. Everyone thinks that just by putting AI on something, they can make money. That's when things are really doomed. But after it all collapses, and remember, we're talking about the next 3 to 5 years here, after it collapses, there will be a crash, a bust, right? Okay. But because it's already become completely widespread, what does that mean? When something becomes widespread, it means that thing becomes cheap. It becomes mass-produced, becomes widespread, just like you can imagine personal computers 20 years ago. Back then, a PC would cost 80 to 100,000, those 803086, 804086 computers would be 70 or 80,000, really expensive. But think about it 20 years later, today. A brand new notebook, the latest model, is really easy to use because the technology is everywhere now, right? A single notebook. It costs less than 20,000, and its features are way better than those 386 computers from 20 years ago. In the future, AI will definitely be the same. After 5 years, after 10 years, all AI technologies and features will become widespread and advance rapidly. And at that point, what does that mean? It means the price will come down. Okay, but that's not the case yet. What I'm talking about is what will happen 5 years from now. It's not happening now. Is there a bubble right now? No, there isn't a bubble yet. But in the future, there will be a bubble and a crash, but not now. Just remember one signal. As long as these major international companies are still buying, they're still fighting for orders, still saying, I want it, give it to me, give it to me. So I say, there's no need to worry yet, really no need to worry, because that means demand is still greater than supply. As long as demand is greater than supply, stock prices will just keep going up and up, rising mindlessly. So when will that change, like I just mentioned? When will that day come? The day when you can't make easy money anymore, the day you go to the market and even the butcher selling pork belly or the fruit vendor selling apples is talking to you about AI. When that happens, you need to be careful. Okay, so looking at it now, I think AI is still in a booming growth phase, and the early stage is still very strong. It's not quite a bubble yet. What is driving the rise in US or international stock markets? AI-related companies. If you want to invest and make money, look for those related to AI. All right, I've been talking 55 minutes. It's the Mid-Autumn Festival, so I shouldn't talk too long. Money not in my portfolio, Angitech and Antagitech rose 1.97% in pre-market trading. Albemarle and Freeport-McMoRan rose 1.8%. Occidental Petroleum, Apache Corporation, and Bank of America rose 1.37%. Broadcom went up 1.2%. Applied Materials, as mentioned, due to negative news on export controls, dropped 2.53% in pre-market trading. KLA Corporation fell 1.7%. There's a short-term impact, not significant. Cisco dropped 0.57%. Overall, looking at the US stock market, is still maintaining a bullish structure, and there hasn't been any change. The Dow Jones Index edged up 0.17%, staying above the monthly and quarterly moving averages. The Philadelphia Semiconductor Index and the Magnificent 7 Index are following the monthly or quarterly moving averages. As long as the monthly moving average isn't broken, everyone is basically making small gains. When price goes up, you sell to lock in profit. If it comes down close to the moving average, you buy. When it hits a new high, you slow down, and when it dips, you buy. That's the current approach. A rate cut this year, and next year election cycle stimulus. And next up is the fourth quarter market, which is usually considered the peak season anyway. So whatever actions you need to take, whatever kind of market it is, everyone really needs to think carefully and make wise decisions. I hope that whether it's before or after the Mid-Autumn Festival, your investment journey continues smoothly. Wishing everyone greater and greater success, and ever more fulfilling investments. Alright, that's all for today's group-related content, brought to you before the US stock market opens. Just to give everyone the latest updates. When class is over, remember to like, subscribe, and share for us. Also, a quick reminder. Next week on Wednesday, October 8th in the afternoon, I'll be giving an investment seminar at the Yonghe branch office. Contact our branch office for more information. Smooth trading and a happy Mid-Autumn Festival.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.